Welcome to Beyond Just Money by Kalkinemedia, an independent global media house and investor relations group. Please note that this podcast is for information purposes only. It's not a solicitation or recommendation to buy, sell, or hold the stocks of any company or companies or engage in any investment activity under discussion. Kalkinemedia is neither licensed nor qualified to provide investment advice through this platform.
Hello and welcome to Beyond Just Money with me, Samta, and today we have Nidhi Sinha with us, who is the head of content at Kalkinemedia. Today we will be talking about central bank digital currencies or CBDCs that have gained traction as the world comes to terms with hyper-volatility in cryptocurrencies. Welcome to the show, Nidhi.
Thank you, Samta. Yes, CBDCs are vastly different from cryptos as they are backed by central banks, unlike the latter.
So Nidhi, what are CBDCs and how are they different from cryptos?
Well, CBDCs promise what cryptos like Bitcoin don't. The former are backed by central banks like the US Federal Reserve or the Bank of Canada, and they act as legal tender. Their values cannot be subject to wild speculation. One can simply view CBDCs as digital versions of fiat money. Fiat money is basically issued by any central bank in the form of paper currency that we use or coins. The best thing is that there's always a claim on the central bank, which means a person holding, say, a $100 bill has an equivalent claim on the central bank. CBDCs can definitely change the way people hold currency. Central banks have yet to finalize the broad contours of CBDCs, but it is widely believed they will make use of the distributed ledger tech, which is blockchain. It is the same technology that powers cryptos, but the way it will underpin the CBDC world can be very different. For example, central banks which exercise control over the issue and supply of fiat currencies will not allow decentralization of database, as is the case with cryptos. CBDCs with or without blockchain will have strict regulatory oversight, unlike cryptos again.
So can we say that stablecoin is a CBDC?
Well, it is too early to say anything on this. Facebook-backed Diem can soon launch stablecoins pegged to the US dollar. In other jurisdictions, they will be pegged to the respective fiat currency. This feature differentiates them from cryptos, but it doesn't really bring them on par with CBDCs. So as the world grapples with challenges brought about by the pandemic, there are two possibilities. Central banks, which have been contemplating CBDCs for a long time, can either shelve the plans or back stablecoins in a bid to fast-track the process. Diem has publicly declared its intent to seek requisite approvals from the regulatory bodies, which can keep it from drawing their wrath. Cryptos have failed on this count, and the crackdown by China and other countries prompted wide selling in the crypto market.
How about China? Has the country launched CBDCs as yet?
China actually has launched digital yuan as a pilot project in some cities, but it isn't clear if the People's Bank of China will use blockchain tech or not, and if yes, to what extent. China's digital yuan was issued by the central bank and distributed among commercial banks. The latter gave it to select customers. For now, digital yuan competes with other digital payment platforms like Alipay and WeChat Pay. In fact, the Fed and the Bank of Canada have elaborated on the need to have CBDCs on various occasions, but any real progress is yet to be made. To this day, CBDCs are a work in progress.
Having said that, Nidhi, do you think that there are any challenges with CBDCs?
The central banks do need to identify and resolve several problems associated with the issuance of CBDCs. Banks need to decide if the retail digital currency would be an anonymous bearer instrument, look at the quantity restrictions on an individual's holdings, and whether it would have a zero interest rate. Moreover, CBDCs cannot be anonymous, as that may facilitate criminal activity. CBDC issuance has primarily four critical problems: lack of privacy, currency substitution, disintermediation, and the inability to ensure compliance. One of the ways to manage privacy and compliance challenges would be to create intermediated CBDC. However, this approach also attracts the risk of domestic disintermediation or currency substitution. Meanwhile, if you look at China, there is little risk of disintermediation there, as most large banks are state-owned. In fact, stringent capital controls enable the People's Bank of China to remain ahead of other central banks globally in creating a digital renminbi.
Well, thank you so much, Nidhi, for letting our listeners know what CBDCs are and how are they different from cryptos.
Thank you, Samta. Always a pleasure.
Well, to our listeners who want to listen to this podcast again, please log on to our website, that is kalkinemedia.com, or you could also go to our YouTube channel. Please don't forget to like, share, subscribe, and hit the bell icon to get notifications on latest videos and podcasts. Until we see you next with yet another insightful episode of Beyond Trust Money, this is me, Samta, saying goodbye, and as we always say, stay apprised and invest wise with Kalkine.
Our listeners are requested to make their own inquiries about any investments, and Kalkine Media strongly suggest that the listeners seek advice from a financial advisor, stockbroker, or other professional as necessary. Kalkine Media hereby disclaims any and all the liabilities to any listener arising from any use of the information shared or discussed in this podcast. This podcast is available for personal and non-commercial use only.